Hey, welcome to edX World. Today's video is on clubs and societies, non-profit organizations. This is another chapter in the IGCSE Accounting syllabus. So what are we going to study today? First, understand the difference between business organizations, the ones that run for profit motive, and the non-profit organizations, the difference between these two organizations. Then we understand the difference between receipt and payment account and the income and expenditure account. The trading activity that happens inside a non-profit organization. Yes, in a non-profit organization also a trading activity can happen. We will understand how and why. Then the income and expenditure account, how is it prepared, and the surplus and deficit that is arrived at the end of the account. And finally, the meaning of accumulated fund, how is it different from capital, and the impact on the balance sheet of the accumulated fund. If you're interested in practicing questions or in theory notes for any chapter in the syllabus, you can consider purchasing our paid course, which is just for $99. That'll give you access to a lot of material, and the access will be there until June 2021. If you're not sure about paying for the course, you can register for the course and preview our 2 free chapters and then decide whether you want to go ahead and pay for the course or no. So first, let us understand the difference between business organizations that work for profit and non-profit organizations. See, obviously the aim of a business organization is to either earn or maximize profit, but non-profit organizations work to provide services to their members. Now, a business organization is obviously started by one or more owners, and each one of them contributing capital towards the business so that they can start functioning the business. But a non-profit organization is run by members. They contribute towards the organization in form of subscription, and that subscription contributes towards the surplus of the club or the society, which in turn leads to more accumulated fund. So their capital is replaced by accumulated fund in a non-profit organization. What is surplus? What is accumulated fund? What is subscription? We will understand in the later part of the video. Now, financial statements that a business organization prepares is the income statement and balance sheet that we've already seen. But a non-profit organization would start preparing a receipt and payment account, go ahead and prepare a trading account if there is a trading activity going on, then the income and expenditure account, and finally the balance sheet. Now, what's a receipt and payment account? Now, receipt and payment account is a summarized record of all the cash or bank transactions that have happened during the period. So assume it like a cash book, but a summarized record. So under a receipt and payment account, you would find all receipts under common heads will be clubbed and put under one row, and similarly payments under common heads will be put under one row. So the left side of the receipt and payment account will record all the receipts during the year, like in a cash book. The right side of the receipt and payment account will record all the payments during the year. And at the end, when we have the opening balance, we start the receipt and payment account with an opening balance, put all the receipts and the payments during the period. At the end, we can find out the closing cash or bank balance that is remaining with the organization at the end. What are the important aspects to be considered when preparing a receipt and payment account? Very important. So the first thing is receipt and payment account is prepared on cash basis. Obviously, like a cash book, only actual cash receipts and cash payments will be recorded in the receipt and payment account. The transactions that do not take place in cash, for example, accrued expenses, will not be considered when preparing the receipt and payment account. Another important point to be kept in mind is that receipt and payment account does not make any difference between the revenue and capital expenditure and receipts. So basically you record all the receipts and all the expenditures during the year. Okay, so whether you pay for an expense or you pay for a non-current asset, you record all of it. And finally, non-cash transactions like depreciation are obviously not recorded because this is a receipt and payment account prepared on a cash basis. So this is the format of a receipt and payment account. If you see here, the receipt and payment account is starting with an opening balance. Now this is a positive balance and hence on the debit side or on the left side. But if this was a overdraft balance, opening balance could obviously start from the right side. The left side will have all the receipts during the period. Receipts in a club can be in form of subscription received from the members, any revenues of the trading activity, any collections for a particular event, and many other receipts. For example, one could even record sale of any non-current asset. The amount received from sale of a non-current asset could also come on the left side. Now, payments in a club could be for purchases made for the trading activity or any other operating expenses that are incurred for the day-to-day functioning of the club or the society, like rent, salary, insurance, and so on. Apart from that, payments could also be made for specific event expenses, and payments could also be made for buying the new non-current assets. Once all of this is recorded, at the end we can calculate a closing balance in the receipt and payment account. Since the debit side is greater than the credit side, a total of the debit side is taken as 40,500, and the difference between the debit minus the credit gives us the closing balance, which is 10,800. So this is how you prepare a receipt and payment account, which is the first part of the set of financial statements of a club or society. Now, a club or a society, basically a non-profit organization, can also have a trading activity, but the trading activity, the aim is not to maximize profits of the organization, but the aim is to provide services to the members, provide the products and services members might be looking for at a reasonable price, so that the members can also benefit out of it. Now, the format of a trading account of the activity that happens within the club will be similar to the trading account you've already seen, the income statement that you've already seen for a profit organization. It starts with the revenues, shop revenues, less cost of sales. You need to calculate the cost of sales, the cost of goods that have been sold, inventory, purchases, closing inventory. Obviously, you know about it. Eventually, you arrive at the cost of sales. Calculate the gross profit. Now, there are certain expenses that might be incurred specifically for the trading activity apart from your purchases. For example, you might pay a rent for the trading shop. You might pay salary to the staff working under the trading activity. So these expenses will also be considered here to arrive at the final profit of the trading activity or profit of the shop. In this case, gross profit was 750. Now, shop expenses were 500. This could be in form of salary, and eventual profit from the trading activity is $250. Now, the next part of the financial statements of a club or society is the income and expenditure account, and the most important part. So the income and expenditure account records all the incomes earned by the club and the expenditure incurred by the club during the year. If you notice my words, I didn't say incomes received and expenditure paid. I said incomes earned and expenditure incurred by the club. So the one very important difference between receipt and payment and the income and expenditure account is receipt and payment account was prepared on cash basis, but income and expenditure account is prepared on accrual basis. You do not see the actual receipt or payment of cash, but you see how much income has been earned and expenditure has been accrued during the period. And once we record all the income and expenditure for the period, we can then arrive at the surplus or deficit for the period. If the income is greater than expenditure, it's a surplus. If the expenditure is greater than income, it's a deficit. Another important difference between income and expenditure account and the income statement of a profit organization is that in the income statement, when the revenues or when the income was greater than our expenditure, it was called a profit. But in a non-profit organization, it is known as a surplus. In the same way, if expenditure is greater than income, we don't use the term loss, we use the term deficit to show that this is not an organization that maximizes profit, but an organization that provides services to its members, and in the process of providing services, there could be surplus collection of funds or there could be a deficit in collection of funds from the members. Again, important aspects to be considered when you're preparing the income and expenditure account. First one, I've already told you that income and expenditure account is prepared on accrual basis. You must make all the adjustments for accruals and prepayments at the end of the year. In receipt and payment account, we recorded all the revenue and capital expenditure and receipts, but in income and expenditure account, we only record the revenue, expenditure and revenue receipts. We do not include purchase of non-current assets in the income and expenditure account. Now, when there is a separate trading account within the club or society, we've already prepared a trading account for such an activity to calculate the profit or loss made during the period. Now, this profit or loss has to be transferred to the income and expenditure account. If there is a profit from the trading activity, you would include it under the incomes. And if there's a loss from the trading activity, which is also possible, you would include that under the expenditure, obviously. And then you do not take the shop revenues, shop purchases separately in the income and expenditure account because you've already taken the net profit or net loss from the trading activity. Another very important point to be kept in mind is at times in questions you might find that there are collections and payments for a specific event. Like in our previous, if you go back to our previous receipt and payment account, you would see that there were collections and prices spent for a specific event. When such a situation is there, you need to net out the amounts and write it in the income and expenditure. Now, what do I mean by that? I mean that if the collections in the event are greater than the expenditure on the event, you need to write the net amount under the income part. And if the expenditure on the event is greater than the collections from the event, you need to write the net amount in the expenditure part. You cannot show the collections separately in the income and expenditure separately under the expenditure side if they are for the same event happening during the period. The income and expenditure account begins with incomes earned during the year, subscriptions that member were supposed to contribute towards the club. See here, profit of the shop, which we already calculated as $250, has been included under the incomes. If this was a loss, I would include it under the expenditure part. If you go back to a receipt and payment account, you would see there that on the receipt side there is collection from event 3,500 and prices for the event 2,500. So what I have done here is I have written the net collection from the event $1,000 on the income side. If there was a net expenditure on the event, I would include this $1,000 on the expenditure side. Now, once we get our total income, we will need to subtract our expenditures. Under expenditures, you will need to take all your revenue expenditures that have been incurred during the year for the operations of the club, and we need to also take depreciation because we are following accrual basis here. Under receipt and payment, we did not take depreciation because we are following cash basis, but under income and expenditure account we need to take depreciation on our non-current assets. Here we get our total expenditure, then the surplus in this case is the total income less total expenditure 17,750. If the expenditure was greater than the income, this would have been a deficit here. Now, subscriptions are very important for a non-profit organization because these subscriptions are contributions made by the members towards the club, and using these contributions only the club can survive, pay for its day-to-day expenses and provide services to its members. So the subscription that is actually received in cash will be shown on the left side of the receipt and payment account because that is the actual receipt. But the subscriptions that you transfer to the income and expenditure account will not be the actual subscriptions received, but you'll have to make adjustments for your accruals and prepayments and make sure that you transfer to the income and expenditure account the subscriptions that the club was supposed to receive during the period. At times you may be asked in exam to make the subscription account. This is the format of a subscription account. I will not be going to the details of this account because we've already covered this type of an account in the accruals and prepayment videos where I've shown you how to make an income account, how to make adjustments for accruals and prepayments when preparing an income account. You should go and watch that video first if you have doubt in how to prepare your other incomes. On the debit side or the credit side, you would have your opening balances depending if the subscription is accrued or prepaid at the beginning. On the credit side, we will have subscriptions received in cash and closing balances will be given, and the closing balances will be on the debit or the credit side depending whether the subscriptions are prepaid or accrued at the end of the year. And finally, what I get in the account as the difference is the income and expenditure account transfer. Basically, whatever subscriptions the members are supposed to pay during the year, that has to be transferred to the income and expenditure account. Now, at times you must have seen in your questions that they mentioned that there were, let's say, 50 members during the period and each member was supposed to contribute a subscription of $100 per year. That's the only information given. They have not mentioned how much subscription was actually received. In that case, see, if there were 50 members during the period and each member is supposed to contribute $100, how much was the club actually supposed to collect from the members? 50 into 100, $5,000. So we can directly put $5,000 in the income and expenditure part because this is what the club was supposed to receive during the period. Other than that, if they give you the opening and closing accruals and prepayments, and they give you the actual subscriptions received during the period, you can always prepare this account to find out the transfer to the income and expenditure account. Now, what is an accumulated fund? Accumulated fund is the amount that has been accumulated over the years by way of surpluses earned by the club. So every year the club might either earn a surplus or there might be a deficit. When the surpluses are accumulated over the period, that is known as accumulated fund. In a business organization, you would have owners contributing in form of capital, and they are entitled to the profits made by the organization. They are entitled to withdrawing amounts for personal use periodically as and when they want. But in a non-profit organization, members contribute in form of subscriptions and they receive services from the club. But apart from that, members are not entitled to any share in the surplus, or they cannot withdraw any amount for personal use from the club. So that's the difference between accumulated fund and capital. How do I calculate the closing accumulated fund? I start with my opening accumulated fund, which is the closing accumulated fund at the end of the previous financial period. I add the surplus made during the period, or if there's a deficit, you would subtract the deficit to arrive at the closing accumulated fund. Now, when you go and prepare a balance sheet, the balance sheet of a non-profit organization is very similar to that of a normal balance sheet. You would start with your non-current assets, your current assets, show your total assets. When you go to the next section, you, instead of writing capital, you will have to mention your accumulated fund. Make this calculation of the closing accumulated fund and write it. Mention the non-current liabilities and current liabilities, and then you can complete your balance sheet. So the only difference between balance sheet of a business organization and a non-profit organization is the part where you write the capital or the accumulated fund. I have not practiced a full-fledged question here. I wanted to explain certain concepts first. So using these concepts, try to solve some questions. Let me know if you're able to solve the questions. If you want me to solve a proper question on this topic, make a next video where I would be solving a question on this topic. Please comment on the video below. Let me know if you want it and I will try to make it. Thank you for being there. And if you enjoyed the video, please like the video and share it with your friends. I will see you in the next video. Thank you.